What's up, traders? Welcome to the Day Trading Show. Now, today we talk all about the biggest trading mistakes that Tom, James, and myself are helping the Black Shirt Club traders work through to start this year. Now, if you don't know what the Black Shirt Club is, you're going to hear a lot about it today. This is our small group mentorship program, which does have space, if you're interested, going into the rest of 2023. So the link for that is in the description, asfx.biz/BSC. If you go to that link, it has all the information there. There's a video that explains it. And you can also book a free call with me to hop on and see if it'd be a good fit for you. There's a time commitment. There's an energy commitment. It's going to really pull the best trader out of you possible, but that does take work. So if you're interested, use the links in the description, head to the website, book the free call. And now, without further ado, enjoy today's episode. You're going to find a lot of value in it. Tom and James share a ton of good nuggets. So make sure you're focused. And like I said, enjoy the episode. What's up, traders? We've got a home team episode. I'm sitting down with my brothers. We got Tom in his Kaizen trader hoodie today, not his ASFX hoodie. Even though he was wearing the ASFX hoodie, he made sure to change out of that for the episode. We got James here today with the goat chain on because, James is our South African goat. They're not a very common animal in South Africa, right? James, the praised goat is a very rare and fine animal. That's why you wear it on your neck.
Correct. It's much sought after.
Much sought after. So we're talking about big lessons for us as trading coaches to start this year, right? We're filming this episode in beginning mid-February. We've had a month of coaching in the Black Shirt Club. We have over 15 members in the Black Shirt Club between new members and our elite members. So I figured we would focus on what have we seen as far as mistakes that some of our guys are making so we can help some listeners avoid them. And also when those mistakes are made, what are we doing to help our traders work through it? So I'm really looking forward to this conversation, guys. I think it's going to be good. Before we jump in, I want to just remind everybody one more time, if you're interested in the Black Shirt Club, if we don't cover the question that you have, book a free call with me. The link is in the description, asfx.biz/BSC. We can hop on the phone. I get on with everybody for 10 minutes. And we'll make sure it's a good fit. Maybe this is a good point for us to start, Tom, because the Black Shirt Club has evolved over the last 2.5 years since me and James started it, partially due to you, due to your tracker that you've helped us build. We give you full credit for that. When you talk to new people, Tom, about the Black Shirt Club, they're not in yet. You're talking to them on Instagram or Discord. Maybe they're in ASFX. They just haven't joined the club yet. How do you describe the workload that we put people through? I'm curious.
So I would, on that welcome call that we have when people first join, I do make a point of trying to make sure they understand how long this is going to take. This is not just a turn up, you take a trade and you go home at the end of the day and shut your laptop. This is about so much more. It's about committing to the journey of trying to become not just a better trader, but a better all-round person, I suppose, because we track everything. We track your trades, but we also track your pre-morning routine. We track your off-the-charts habits, your trading errors, your on-the-chart habits. And we really get you to deep dive into your trades and really push self-awareness, because that's what we have found has led to the biggest improvement in the previous people that we have coached. So this is forever evolving, this process, and it gets tweaked after every quarter, or every new thing that we learn about this process, it gets tweaked and added back in. So it's forever changing and evolving and getting better and better as we coach more and more people. But I would say that it takes at least half an hour to an hour to fill it out properly. And every day.
On top of your own trading. That's exactly what I tell everybody. I tell them 45 minutes to an hour extra per day if you're really going to do it well, if you're really going to give effort. And the reason that that's important is Tom, our spreadsheet master, who tracks everything, has proven to us that right now, the group has an 89% success rate. So if you come into the group, there's an 89% chance that you will make more money month 2 than month 1 and month 3 than month 2. We've proven that. But I can guarantee you, and Tom, back me on this, I didn't ask you this, but back me if I'm wrong or right, whatever. The guys who, of those 89%, the guys who hurt our statistic in this scenario are the guys that did not give full effort to the program, right? I think we could say almost 100% certainty that if you give effort to the program, we are going to make a drastic, not a small, but a drastic improvement in your trading. Fair?
Yeah, I think there's definitely a correlation between the people that put in. You get out what you put in. I'm just going to leave it like that.
Yep, 100%.
The more you put in, the more you're going to get out of this. 100%.
Would you say that one of the things that the traders who are putting a lot of effort in, one of the things that they're maybe learning is selectivity? Because this was one of the things that I wanted to speak about today, as far as like one of my big lessons in my coaching calls is how important selectivity is. And I know you ran one of our weekly Black Shirt calls, which is a group call for all members to join. And didn't you tell me that you highlighted me and Otto as two of the guys who have been paid out in January, had good profitable Januaries, and it was due to, you think, the selectivity. So do you want to speak on that for a second to start us off?
Yeah, so I struggled in January. I had a losing month in January, and I tried to take a different approach. I came into 2023 trying to size up and get more aggressive and take more trades. And that approach completely backfired on me in January and ended up having a losing month. So during the mid-month, I was like, because of the reflection that we're doing every day in the journaling, I was like, this shit's not working. I'm digging a hole here. And the people that are succeeding, what are they doing? So having access to people's TIPs and DERCs, because everybody shares them every day, I go through and I read them and I look at them. And the people that were doing well was Austin and Otto were the two that stood out. And they'd taken fewer trades than pretty much everybody. So they were really waiting for their setups to present. And January was completely the wrong time to step on the gas. So January paid off being selective. So yeah, I definitely think that you were quick to pick up on the market environment and adapt to that. So I think probably you can speak on why you were
well,
doing
I was going to
that.
say that. I was going to say, I don't know if I was quick to pick up that the market was not favorable enough. I just know from January in the past, like I've not traded a lot in January. So I kind of came in extremely like conservative, if that's the right word. First week of the month, I didn't even trade. We had NFP. It started on a bank holiday. I didn't trade at all that month or that week. And then I traded just really 3 weeks of January, and I put up like a little bit less than 1% gain. I think part of that, and this is good, for me to share with all the listeners, I think part of it, we have to say part of it is the fact that I'm only looking at SPX and I'm only trading this one thing right now. There's probably a lot of value in just looking at one thing that I've not shared with my audience enough over the last couple of years. I think for most people, it probably would help them. What do you think, James? Do you think that less assets on the watch list is probably better for most people?
I think so. And this, the reason being is there's obviously multiple, but I think for me is that if you're watching, and I think you should be maximum watching eight assets. I think if you've got more than 8 pairs on your watch, just 8 to 10, you're probably looking at a bit too much. I would say between that 8 and 10. For me, I find it's between 5 and 8 is kind of like my sweet spot of and I'm only trading currencies. I find that that's my sweet spot, 5 to 8 currencies, GBP and Euro pairs. But I think just from the bigger watch list, you can always find something to trade. If you're watching 20 assets, you're always going to find something to trade, and that might not be your best trade setup. And I think this comes to the selectivity. What does your best trading setup look like? Is it for Austin, it's the A2. For Tom, it could be the D1. Whatever it is, but what is your best trade setup? And then scale up in that. Don't try to take 5 different entry types. Find what you see best, what works best according to your data, and then scale. It's all about scaling up from there. Focus on a few assets, on one setup, and then scalability.
Right, because then you can focus on what Thomas was trying to do, which was position sizing and getting bigger in the positions. But I think you might have had different results, Tom. You tell me, looking, your statistics better than anybody. Would you have had different results if you would have had a smaller watch list in January?
I wouldn't have, no.
So it wasn't that the bigger watch list was making you take more trades. You were just generating ideas to just take more trades in general.
Yes, and I was just taking lower probability trades more often. rather than taking higher probability setups
less
often, or being prepared to take more than one trade a day, I suppose, or on the same pair or the same asset.
So what are you doing now in February to rectify?
I am only taking high probability setups, looking for the variables that we look for in the ASFX entries, and specifically the A2 entries. So I'm leaning into high time frame alignment, off structure, perfect L50s, perfect EMAs, and then dropping down to take more entries, because my goal is still to turn over the edge more and to take more trades, but dropping down onto the time frame where that bias is very, very clear, rather than taking some of the other setups that I was taking with swapping out 50s or counter trend or whatever that may be, is sticking to what was working, but just turning the edge over on different time frames a little bit more.
I like that. Just the shift of dropping the lower probability trades. What about this though? And I think that people will appreciate the candidness or the honesty, if that's what you would call it. Not that we're not honest all the time, but like when you're making money in other ways, whether it's through coaching or through another business or whatever, do you think that that plays a factor into selectivity? Do you think that if you're not if you're stressing your bills, if someone is like trying to pay rent with their trading, they're probably going to be less selective? Isn't that fair to think?
If they're not, so say that again, sorry.
No, I'm saying somebody who has money,
yes,
either saved up or coming in from other
yes.
sources, not tied to their trading. That person, use me as an example, I am not tied. I don't need the money from my trading, from my funded payouts. It's nice, but I don't need that money. So I think that makes me a little bit more selective, conservative. I don't take stupid trades, which is why I'm still running a win streak from last year. So I'm curious, like between yourself and the guys you're coaching, do you think at some point advice is like, and of course you're making other money through your sports and through your coaching and everything, but like to some of the guys we coach, they don't have multiple streams of income. Do you think that becomes a piece of advice?
Hugely. I spoke about this in great detail on one of my ASFX TV streams the other week. And it was at the back end of January when I'd lost money. And I think it's irresponsible to not have, if you're just starting out going full-time or you're starting out as a trader, I think it's really irresponsible for you to not have other forms of income / a financial buffer and trying to go full-time, because you will go into drawdown. And I can speak from experience on this about being in a drawdown, and you can do everything right in trading for a month, and say you have a bad month and you lose 4% in a month, which is still not too bad, but you can easily lose 4% in a month. Mm-hmm. You can then have a good month. So say I have a good month in February and make 2%. Pretty good month.
Yeah.
I'd take 2% every month for the rest of my life.
100%.
You've now had, not only have you lost money in January, you've then still not got paid in February because you're clawing back out of the drawdown. You then have another good month in March. Great, you've made another 2%. Well, now you're still back at break even for the year, and you've 3 months in,
right, and
you've not been paid a penny.
Right.
Then you can have a bad month in April and lose 2% again. Now you're back down to -2.
Yep.
But then hopefully in May you have like a 4 or a 5% month and you start to get back in. And that is genuinely the reality of being a full-time trader at times.
Yep.
Can go months without a payday and do everything right. And the psychological pressure that puts you under, if you have to take that money home to put food on the table, is hard.
Most people will crumble under that type of pressure. They will not be able to do it well. I've never, ever, if it's happened, it's a select few people and it is not sustained. I'm not talking to anybody. I've been trading 8 years. I'm not talking to anybody that went full-time in their trading early and made it work. I'm talking to a lot of traders that have a very successful entrepreneurial venture or previous business experience and are tiptoeing their way into trading very carefully because they don't want to give up the money that they worked for years to sometimes build, you know? But I think that's the beauty about trading too, is like on the side of we will coach traders who are not in a great financial position, and we'll try to help them out of it. We've been very fortunate, right? Like, especially, I'll be honest, you two, again, you've come in to, James has been here a little bit longer, but you guys walked into a brand that I built to have a good reputation. We now attract people who have extremely successful businesses, extremely successful previous lives. I did not have those kind of clients when I first started this. So now those guys who have previous experience, I think they understand the selectivity a little bit more than some of these new guys. Would you agree with that? It's the older, wiser, sometimes more business experienced people that understand the importance of selectivity rather than the new young gun. I think that's probably a fair point, right?
Yeah, I would definitely say that there's no, whilst there is one guy that jumps out that does like pulling the trigger and firing the bullets. There's not too many that take a lot of trades, but they could be a lot more selective than they are. I think we could all be selective, but I think that there's a fine line.
That's what I was just going to say. The line of selectivity between selectivity and over trading, that line is so freaking thin that
it is. And going back to that Black Shirt Club calls that we have every single week with our guys, I go through and collect everybody's data, and I look at the data and study the data because I want to know what are the biggest mistakes that we as traders make. Right. And that goes from Austin, me, James, we collate all of that together and we look for trends. Like, right. What are the mistakes that us as humans and traders are making as a collective? And when we talk about being selective in taking the trades, there's the flip side of that of missing trades. And it is comfortably the biggest mistake that we as a collective group make. And it's 300%. We make it that mistake 300% more times than the second biggest mistake.
That's crazy.
That's interesting. So just from my take on this, and I've been doing something with all my guys that have been coaching in the Black Shirt Club this week on our calls, is I'm doing something that we gathering the 5 best setups that they think is their A+ setup. And I'm going to go sit there with them next week and discuss the commonalities between them. What is their best setup? Because I think that you're always going to miss trades. That's a given. You can never catch every move in the market, right? That's a fact. But if you select one setup that you have that you trade best in, whether it be a breakout trade, a pullback trade, a reversal trade, whatever that trade is, making sure that you know what it looks like and you're not missing it. Because as I said, if you're trading 3 different entry signals, there's bound to be a time where you're missing a trade. And as Tom said, that's by far the most for everyone in a Black Shirt Club, the common mistake. But if you know what your setup is and you know what you're looking for, and you're honing in on it, I think that creates a better chance of you not missing it, right? Wouldn't you guys agree?
Yes, only if you're okay with not feeling FOMO when you see another thing happening that then sucks you away from the plan you just committed to. If you can be committed and disciplined to what you're saying, yes, I do think that increases selectivity, because then you're saying not only am I slimming down my watch list, but I'm only looking for a certain entry, a certain exact trade to happen. I think like the idea that is the most common mistake, Tom, I would actually guess that that's a mistake that is made more common than even the guys in our group are tracking. Because I think almost every day you could be really tough on yourself and say, I should have been in that with something almost every day. But the bigger takeaway for me in that, I feel like, is if you know you're going to miss trades, it's a given, like James just said, what are you going to do to maximize the trades that you do take, right? To stay in them longest or to their fullest extent, to put the proper position size on it. What I've struggled with, because I feel like this whole episode we've been saying how great I'm trading, and I don't think it's that great. My struggle has been the selectivity is good, but my position sizing is too small. So while James is making a great point of like, you want to be in your best setup, I'm doing that. I'm in my best setup. I'm in winning trades, but I'm afraid to lose, whether it's afraid to lose my funding account, afraid to lose money on the funding account, afraid to lose my win streak. I'm afraid to lose, and that ends up putting me in a smaller position. So before we leave the topic of like position sizing and selectivity, what would you guys do if you were my coach to help me be more confident to put more risk on the trades?
So for me, it all starts with the process of understanding why. We need to get down to the trigger point of why you're making the repeated mistake. So what's the reason behind taking a trade without full size? Is it because you don't trust the system?
Fear.
Yeah, so fear of what?
Afraid to lose. I don't want to be wrong. I could take being wrong. I don't want to lose money on this funded account because as much as I said I don't need the money, I do want the money. I don't want to be negative on it. I want to take payouts. I just got one from the first month. Now I get payouts every 2 weeks. I want to get them payouts.
So for me, then it's looking at the data and the information. Are you sizing too big to start with? Is your initial size that you should be in there? How are you determining your position size to start with?
That's a fair point. That's a fair point. So, for example, the B setups are 0.15%, C setups 0.1%, and A setups are 0.25. So for a funded account, I don't think that that's too heavy. But like you bring up the same point I thought about 2 weeks ago when this was a clear repeated error. I was like, maybe I just changed my plan for smaller positions, and then I will never have to say I'm in too small because now I'm trading what the plan says. But then you'll have Chris come out. Chris is in the BlackShirtClub, and he'll be like, hey, bro, if you would have just traded all of these trades at 3%, you'd be a gajillionaire by now. And I'd be like, yeah, Chris, but if I traded that bigger percent, I'm being funny with the 3%. This is, I think, now we're getting deeper in it, but I think if I trade too big, Tom, I'm more likely to put myself in a position to go off tilt. Where if I lose a 0.1 or whatever, small little 0.07 trade, it's so small, I'm like, okay, I lost, I'll move on. You know what I mean?
Yeah, so I get it. And I'm going through this exact process with somebody in the Black Shirt Club at the minute. Otto, great trader, very consistent, very, very good. Like you said, you've mentioned him already. Size is too small. For me, again, we're coming back to the data. With somebody that's got an 80 to 85% win rate like yourself, you are leaving so much money on the table by sizing in at 0.1. Your chances of a 4% drawdown is nigh on impossible at that size.
Right.
So you are leaving money on the table by not. So for me, this is the same with Otto, because exactly the same thing. His size is very similar to you, very similar trading style. So what we have said is, well, let's do it very, very gradually. We don't have to go from 0 to 100 like I tried to do in January, and it ended up costing
doubling the position size.
Wrong approach. Go from 0.1. So say your B setup or C setup is 0.1. Right, I want you for week 1 of the next month to go 0.11. You can go from 0.1 to 0.11. If you're okay in week 1 with that, week 2 we then go, right, C setups or B setups 0.12. And we'll have a week at that. And then what we've really focused on is when you're in a trade, there is a box in there, how you're feeling. We have made a conscious effort this week again on the Black-Shirt-Club to saying, how are you feeling in the trade? I want you to, at what moment is it that your heart starts to beat a little bit more? At what stage is it in that take profit? You can see the money on the table. Do your palms start sweating? Is it like 80% towards your profit? Is it 70% towards your drop down? At what point does the money then start to attach to you?
Right.
So you can be more aware of the emotions.
I like that.
And then week 3, right, we know that week 2 was at 0.12 was a little bit iffy because of the emotions you're saying when you're in a trade. So we'll just horizontal 0.12 for week 3. We'll keep it at that. And then we start to build it slowly. We don't go from 0.1 to 0.3 because that's a big jump. That's triple the size that you're used to. So that's the process that we're now trying to take. And yes, it's going to take a bit of time, but we're in this for the long run. We're not here to flip an account overnight. We're here to make sure that we're here in 5 years' time. And we're here to make sure that we protect that capital.
Right. And exactly. The problems that I'm dealing with now are much different than they were 4 years ago. Like now I have multiple 6 figures to trade with. We're trying to not lose that money. So every decision is like, how are we preserving the capital? Like you said, because there's going to be winning trades. It's undoubtable. I can find winning trades, but what are you doing to preserve the capital? Which is a great point from
Yes, exactly. And it's so easy for me to sit here and say, well, you should be trading 5 times bigger than you are to make money. But
of course,
we know it's not that easy.
It's not that easy. And
you peel back the layers.
That's what I was just going to say. You peel back the layers, you get, the mistake is I'm trading too small. Well, now I'm trading the right size, but now am I getting out of the trades too soon? Oh, now we got another error.
Or you're going off edge. or
Exactly.
because of that. Yeah.
It's always like that. And that's why I think, yes, it is the most common mistake we're seeing the group make, but it's probably out of all the mistakes, the best one is I missed a trade entry, because you're not losing money and you can really work on improving that to try to be in those trades. Out of all the mistakes you could make, I feel like that's probably one that's the best. Would you agree?
Yeah, and when we went through this, we had a really good discussion, like 15 traders on there discussing, and it turns out, because when I came to that, I was like, well, I miss trades. It's my biggest mistake as well. I miss trades. Mine was because I was either distracted or I was like in the middle of, I don't know, ASFX streaming or coaching or whatever it may be. I missed a trade entry for whatever reason. And then people were coming in and they were like, well, I don't miss it for that reason. I miss it because I'm scared. I'm like, oh, so there's actually a lot of triggers for the same overall mistake, and each trigger needs a different solution putting in place.
Yeah.
And I found that really, really, really interesting. And there were so many different answers or solutions for each individual problem to the same wider problem, which was really, really a lot of value. I found a lot of value in that call.
No, it's great. I think a lot of people in our group take value out of those weekend calls, because during the week, we're trading, we're reviewing, we're trading, we're reviewing. You don't get that deeper dive as often. And I think that, like you said, this trading is an onion, bro. There's a lot of layers to this shit, and it's smelly sometimes. It's not as pleasant as it is when it's cooked up with a nice steak, So trading is like an onion. Isn't that a quote from Shrek, I think? Doesn't Donkey say something like that? Something's like an onion. But I wanted to tie, before you made that last point, Tom, I wanted to tie that into something that I know James has really made a good improvement on, I feel like, in the time that I've traded with him, which is forcing trades, not in general of like any day of the week, but specifically forcing trades on a Friday or a Monday, and forcing trades because of a challenge, So I think we should speak on this as something, because it's something we've seen. You had a guy, Tom, who forced a trade before he went on a trip this past month that screwed him up and sent him back in the challenge, right? So why don't we speak for a second about how to avoid forcing trades? And I could say really quick, like with my guys, I do everything that I can to have them not feeling FOMO on a day-to-day basis. And even if some of them are distracted with other things, for example, Liam was distracted with his other business, which he's now quitting because he's going full time. But that's why we said, bro, if you're distracted from your other business, you're more likely to feel FOMO because you're not focused. FOMO happens when you're not focused. And then you end up taking and forcing stupid trades. So why don't we just not trade Fridays? And he's been doing incredibly well since we just cut that day out. So I'm curious, I'll pass it to James first. How are you coaching the guys through forced trades as an issue, specifically forced trades because of a challenge or end of the week kind of thing?
Sure. So yeah, first of all, I would say challenges can affect all of us mentally with the time constraints and the time limits. And I think FOMO, like you're always going to have that time pressure if you're taking a challenge, just the nature of the business. So I actually have been guiding them and telling them to look at their data, right? What is their data telling them? If they don't trade well on a Friday and a Monday, then why are you looking to force a trade on a Friday or Monday before you go off on the weekend, right? So I'm really focusing on what days they trade best and what times they're trading best as well. Because if they know that they trade based on Tuesdays, Wednesdays, and Thursdays during the London session, making sure that they're on the desk for those sessions, then they know they were at the best times possible for their trading to be on. Instead of saying, oh well, I missed an easy read on the Monday. Yeah, but statistically, that's one out of the past 5 Mondays that was a winner. You're letting your data guide you, not your emotions.
I like that. Tom, you want to say anything about that?
Yeah, a very similar approach to James in the fact that I let all of the data that we collect really drive home where a trader should or shouldn't be trading. Because I find, and I've had this conversation today with the trader, that a lot of the people can make money in the market. Making money is not difficult. Not doing the shit in between the making money is what people find tough. And I go through an exercise, and it's practically every call. I go to a compound calculator and I make them tell me how much they've cost their trading business through the mistake. So whether that's taking an edge off trade, forcing a trade on Friday,
getting out,
doing something
early,
off
whatever.
plan, and they're like, oh, it cost me 0.3%.
Yep.
There was a guy last month that made 22 trading errors and cost himself like 8%. And this guy's trying to get funded. And I'm like, you've just made enough to get funded, but you've done that much
in the opposite
made
direction.
That many errors in between.
Right.
You've not got there.
Right.
And we went through and I was like, this is how much you're costing yourself every week. And then he's like, you can make 10%. So if he can make 10%, he can get funded for £1 million because you can get £1 million account now if you can make 10%. And that's over the course of however long you want it to take.
Right.
And if your mistakes are costing you compounding 95% of it in a year, you can probably have multiple accounts. You can probably make multiple 10% and get paid out just by cutting out the mistakes. You don't need to go and do anything different. But it's really, if people are so attached to the money that's making them make these mistakes, we need to make them understand the cost of their mistakes. And that's in terms of what they're costing themselves, their families, their futures, their lifestyle, using hard numbers and the monetary side, which is what people get attached to. So whilst they're on pretty much no numbers in the TIP in regards to profit and loss, it's all percentages. We can then transfer that percentages to what it looks like for future capitals, because our job as coaches is to help them with the process. If we can get traders to nail down the process, the money's going to be the easy part. Because if you can stay consistent for 2, 3, 4, 5, 6 years and make 20, 30% a year, you're going to get your hands on cash. And it's the same process whether you're trading £10,000 or 10 million.
Yep. And I would just add into that the only way you know what mistakes are costing you, like you see everybody listening, how Tom can say he made X amount of mistakes. That's because that trader that he's speaking about, all of us in the BlackShirtClub, we're tracking them every day. Because of course, if you sit there on Friday and you go, well, what errors did I make this week? I made a few. That's what everybody would say. I made a few. But if you track them every day, not only when they happen, but also now our TIP, which is our tracker that Tom keeps mentioning, the tracker prompts you to say, okay, I not only did I make this mistake, but how much did it cost me? And then you have a number to it. And then at the end of the week, all of those from Monday to Friday, they're all added up to give you a weekly. And then you start to see that you're costing yourself more money than you're actually making. It starts to bring a whole new level of awareness to these problems, which, like we always say on this podcast, I feel like every episode it comes out, we're not trying to get rid of trading mistakes. We are trying to make them cost less and happen less often. That's it. And the only way I think you do that is what James and Tom, both of you said, self-awareness has to be through the roof. So what do you do to increase self-awareness? You track everything. You document everything. Even now, like Tom said, this week, putting emphasis on how are you feeling at that moment when you start to sweat? What is that moment? Where is the heartbeat at that time? You know, that paying attention to those moments brings new light, new awareness on some of these issues. And once you are aware of something, it's amazing. Like humans are very cool for this. We can bring awareness to something. Even if you tell me it, that is awareness. But when I see it, then it becomes very real and much more avoidable. You know, it's not like we're doing something like I'm giving a potion to somebody and now they don't trade as much. They don't overtrade. No, we track their trading. It shows them every day they are overtrading. They see at the end of the week their most repeated mistake is they are overtrading. The next week, that's their one point of focus. No overtrading. That's it. Trading too big. Next week, we focus on that. So I think it is that Kaizen incremental process of stepping forward and moving in a direction through constant review, through constant analysis. And that only can happen if you really track everything in detail. But this is the bigger point maybe out of all of this. When we talk about the lessons that traders need to learn, a lot of people are not going to make it in trading. And the part of that is because they don't love it enough. They don't love the tracking. They don't want to do the tracking. It doesn't get them going enough, but they do want to make money. And I think it just is for those people, trading is not the avenue that they should be down. I think the guys that are crushing it, I can speak for myself. I love looking at charts. I spend more time looking at charts than I do in trades. I spend more time reviewing my markups of trade ideas and my own trades than I do actually trading some weeks. So I think when you love the process that much, then the result is as good as mine looks. Like the result comes. It's not even like something you have to try for, you know, because you're in line with that process, the process that is highlighted through the increased awareness that you get through the tracking, you know?
Yeah.
Cool. All right. So I think for today, boys, I think we can wrap it here. That was a lot of good nuggets in this episode. I know it's not the full hour, but I think this is still good. I'm sure everybody will find some value in it. So why don't we leave it here? I'll let everybody know again one more time. Black Shirt Club enrollment is open. We will put the link in the description. If you want to just go to our website, click Black Shirt Club at the drop-down menu. You can book a free call with me. We can hop on and make sure it's a good fit. Maybe there was a question you had that we didn't cover in this episode. We do have other episodes where we've mentioned the club, but I'm more than happy to get on a call with anybody. We're looking to take on some new people going into the second half of 2023. So we have space. If you're interested, please reach out. Let us know. We'd be more than happy to get on the call, like I said, and see if it'd be a good fit. But Tom, James, another good episode in the books today, boys. Well done. Great stuff. I appreciate you guys very much. And for our listeners, make sure you check the link, asfx.biz/BSC. It's in the description. It's on my website. It's on Instagram. The boys have it in their bio. It's everywhere. Just go looking for it. You're going to find it. And hopefully we would love to see you come into the club this year. So if you have any questions, please reach out. Otherwise, we'll see you in the next episode. Thanks, everybody.